Thank you very much, everyone, for joining us today. Today's the topic of our webinar this month is VAT on e-commerce and online businesses. So obviously quite a big subject in a small setting. What we'll be doing is we'll have, half an hour, we'll have a presentation by Ahmed, and then we'll do a Q&A for the next half an hour. I'm sure lots of people have lots of specific questions that they have that they want to ask from the experts. My name is Rayhan Aleem. I'm the managing partner of an accounting firm called Alpha Pro Partners. We're Xero Platinum Partners, and we focus on the Xero accounting software. I am very delighted to be joined by Ahmed and Yazan. Ahmed and Yazan both are partners of an accounting firm called Bestfolio. They are our go-to people when it comes to anything technical on VAT. They have lots of experience. So Ahmed, for example, he worked in tax in the UAE, Qatar, and KSA, and he has implementation experience and experience of corporate tax and international tax as well. Yazan also has equally, strong experience. He's worked for a number of organizations, but more importantly, he was involved with the FTA while they were finalizing the GCC framework. And so he's got a wealth of experience, which I'm very honored for them to join us today and give you guys lots of value. So without further ado, Ahmed, if you want to start your presentation, thank you very much.
Thank you, Rayhan, for the introduction, and thank you for arranging this webinar. I hope it will be a very informative one, and it will be helpful to the attendees. Actually, this subject is quite important to taxpayers here in the UAE, and we are happy to discuss it and to provide the major points and information that are needed by the attendees. My name is Ahmed Al-Swaiti. I used to work in the tax field for around 13 years now. In general, taxes are something that are interesting in the case that you are going into details indeed. So for this particular subject, we will speak about some details that are relevant to this subject. So here, e-commerce and online business, in general, in the UAE, starting from 1st of January 2018, VAT was implemented. The big challenge for taxpayers that there was no taxes at all before that date. And the tax awareness was like needing, more practitioners, more people to understand it, more efforts to be invested in the market to understand what's going on from tax perspective. The Federal Tax Authority issued the law, issued the executive regulations, and they are continuously issuing guides, clarifications, communication with the taxpayers to make sure that everyone is compliant. But still, we need to keep understanding, keep updates, and keep asking about whatever relevant tax matters that are relevant to our businesses. As we all know, VAT in the UAE is subject to 5%. This is the first thing that comes to your mind when you think about VAT. 5%. Okay, 5% on what? 5% on everything that are being sold or are being supplied. And when we say supplied, we can say like we are selling out, we are renting out, we are providing the right for someone to use something, whether this something is a product or service. So if we are saying this definition, we are speaking about a very wide concept. So who is supplying? If I have my own car and I want to renew it, I want to upgrade, and I'm supplying or I'm selling this car to my friend or to my neighbor or to anyone, is this a taxable supply? No, this is a normal supply because, I'm not intending for a business. So this is another requirement, or this is another circumstance that we need to take into consideration. So if you are considered a taxable supplier, that means that you have to sell something, whether goods or product. You have to be doing this on a continuous basis, and you have to aim for a profit out of this transaction. And these are the major conditions if you are a taxable supplier or taxable taxpayer. So before digging into the e-commerce subject, we need to know that everyone is subject to tax if he is fulfilling these conditions or requirements. And if you are selling goods or services in the normal course of business, whether from your shop, from your home, from your specific account in any platform, whether online or offline platform. And the online selling of products nowadays is a huge market, is a huge concept. And now, for example, if you are thinking about this, mainly we can say like 70% of businesses in the country are using the online platform, whether they're private or public or any other online platform, to sell their products. And after COVID-19, everything changed. So if you close your shop, you can still sell through online, but if you don't have online platform, you will never sell your products and you will get into a harmful losses. So is it subject to tax? What taxation? Is there specific rules? So this is what we are going to speak about. So here for an introduction, e-commerce is a traditional commerce, whether for goods or services, usually supplied from physical location. However, if I am using electronic commerce, that means that I am making a supplies of goods and services over the internet or similar electronic network. And it doesn't need to be your own website or your own platform. You can use Amazon, for example. And maybe most of us, we know that a lot of businesses, whether huge businesses or a single person selling his small product through Amazon or through Noon or through any other online platform. So what do you think? You think that maybe this is not subject to tax? So there are certain rules to use it in this case. So what we will discuss goods purchased through electronic platform and service supplied by electronic means. Goods and services from treatment perspective from the tax law is different, and we need to know that each of them has specific rules to follow when it comes to tax compliance or tax accounting. Before we speak about this, let's have a recap on how we are dealing with VAT. What is VAT? How it works? Maybe most of us know the VAT, but how it works. So first of all, if I am an importer means that a person who is importing goods or service from outside the country, and in our case, outside the UAE. I am importing a good, and as an importer, most likely I will sell it to another party. This party could be a manufacturer, so he can remanufacture this good if I am selling him raw materials, or he could be a retailer, he could be a shop, he could be directly a person that he will use it as an end user. But to give a brief example, we are providing this example. So VAT is applied on transaction based. So if I'm importing a good, I am paying 5% on the import. The cost is 100. So the 5% I will take it, or I will pay it to the Federal Tax Authority directly. If I am reselling as a manufacturer or second seller, I will get some profit or markup on the resale. So for example, I'm selling for 180. So 180 multiplied by 5% equals 9. But if I am paying to the tax authority, I will not pay the 9. I will pay the VAT after deduction of the input VAT. And the input VAT means the VAT that I paid on my purchases. So I purchased this good from the importer. I paid him 5. I am charging my retailer 9. The difference is 4. So I will pay only 4 to the Federal Tax Authority. Again, the retailer purchased the goods for 180 plus 9. So he paid 9. Now he is reselling to the end consumer, to you and me and to my friend and to my family as an end user. So this retailer will sell it for 200, for example. 200 plus 5% equals 10. He already paid 9, so he have to pay only 1. If you see at the end, 5 plus 4 plus 1 equals 10. What is the 10? 10 is the 5% on the end product, on the end price. So if somebody is telling you that VAT is duplicated tax, or I am paying tax many times, this is not correct. Because at the end of the day, if you are doing the tax correctly, if you are charging the input tax and claiming back the difference, then at the end of the day, you will end up paying the 5% only at the final price, which is the 200. Okay, this is the VAT, and this VAT can be used by everyone. Who is required to do that? As we said, taxable person on taxable supplies and deemed supplies, importer of concerned goods. So anyone is doing this, he have to use the VAT application as per the law. Who is required to register on mandatory basis or voluntary basis? So same conditions, if applied, if you hit the 187,500 dirhams equals to, which is equivalent to $50,000, that means that you can voluntarily register if you want. Why someone can register on voluntary basis? Because he need to claim back the input VAT that have been paid on his purchase. Otherwise, he won't be able to do that. However, if you cross the 375,000, which is equivalent to $100,000, then it's mandatory to register. Okay, so this is like an example of how taxable supplies run. And now we want to speak specifically about the e-commerce. You know, e-commerce, I can still sell from anywhere to anybody at any time. And this is different than normal shop. If I am reselling in my shop, for example, I have a shop in Dubai Mall. It will open at 10 a.m. and it will close at 10 p.m. Without these times, you will never be able to sell any product. And the customer must be there in that location in order to buy the product. And I am, as a supplier, I have to be there or registered there or resident in that particular place according to the law in order to sell my product. However, online is not like this. I can be sitting in the United States and I have an online business in which I sell products here in the UAE, and I'm not selling these products from the United States to the UAE. I'm just contacting somebody through a subcontract or side contract with another seller. I tell him, okay, please deliver this product from your location to my customer in Dubai. This is an online business. I can, of course, be here. I'm registered here. I have online business, but I am selling in KSA. So I'm exporting the product from the UAE to KSA. Or I am selling the product in KSA from a KSA supplier through my communication with him. So I'm selling a product from KSA to KSA from my place here. So here are the 4 cases. A supply by a resident supplier to a recipient in the UAE, and goods being delivered from either inside or outside the UAE to the UAE consumer. Or a supply by a resident supplier with goods being delivered from either inside or outside the UAE. A supply by non-resident supplier, in which the example that I said, he's outside the country, but he's selling goods delivered from either inside or outside the UAE. And a supply by a non-resident supplier with goods being delivered from either inside or outside the UAE. So these are 4 cases when it comes to supplies of goods, and we are speaking only about goods here, not services. When it comes to VAT accounting, we have to look at this schedule. This schedule have been taken from the guide that have been issued by the Federal Tax Authority in this regard. So they are summarizing this. The guide is 30 pages actually. However, we have taken this summary to recap and for our Q&A at the end of this webinar. If the supplier in the UAE, and that means that he is resident. What the mean of residency? Residency, it could be through a fixed establishment or permanent establishment in the UAE, which means that if I have a trade license here and I am running my business through a trade license in the UAE, that means that this is a residency according to the law. Even if I don't have a trade license, however, I have my product, I have specific establishment, I have a place that I'm keeping my products, or I'm keeping my employees, or I'm keeping my goods here in the UAE to sell these products. That means that there is a residency, and the UAE or the supplier should follow this UAE resident taxable as a taxable person. So in the first case, if the goods are delivered from the UAE to the UAE inside the country, this is the major or the general rule. and is subject to 5%. And of course, the supplier will have to account for the VAT out of this transaction. If I am based in the UAE and I am selling outside the UAE, it could be subject to 0% if I am fulfilling the export requirement according to the law. If I am exporting goods, in summary, I need to have certain documents that prove that my goods are exported from the UAE to outside the UAE. And of course, the supplier will have to account for this VAT. The critical issue is here that if I am a supplier, I am based outside the UAE. However, I am selling the goods to the UAE, whether I am importing these goods into the UAE or I am dealing with a local supplier here to fulfill my customer's requirement. So in this case, there is no VAT. And maybe this information, limited number of people know this information, because how come there is no VAT? Why? Because we can speak, or we can put a general rule. If you are based outside the country, then you can't issue a tax invoice including 5% VAT from your place or from the country that you are living abroad. Why? Because, for example, there is no tax registration number. So how can do that? In this case, the UAE customer will have to import your product, and he have to account for this product from VAT perspective if he is required to do that, which means if he is a tax registrant. If he is a tax registrant, then he can import the goods. He can use something called reverse charge mechanism according to the UAE law. Of course, this webinar is limited by time, so we cannot go through in details, but we can discuss this in the Q&A after this presentation. If the goods are delivered from outside the UAE to outside the UAE, then nothing has to be done. Why? Because this is considered an out of scope of VAT transaction, in which this is not local supply, not subject to 5%, nor export or import. It's not subject to 0%, then this is out of scope. It shouldn't be even reported in any tax return if there is any of the parties is registered in the UAE and has to submit his own VAT return at the end of that period. Okay, supplies of goods in the case that the supplier is not resident in the UAE. If he is not resident in the UAE, then he didn't fulfill the requirement of the tax residency in the UAE. So in this case, the major responsibility of accounting for VAT falls on the resident party. And that's why someone, when he asks that there is a company based outside the country and they are selling their products here, do they have to register or not? The first question, your customer is registered and they have TRN or no? If they do not have TRN, yes, you have to register. Why? Because you are selling a products from a local based place to a consumer who is not registered. So we need someone of both of them to register for VAT. But if your customer is registered, then he has tax registration number and he can use it to reverse the amount that you have sold. And so he will be in the place that he is the supplier and he is the customer at the same time. And this is the meaning of the reverse charge mechanism. Let's jump to the supply of service. Supply of service through internet or through online platform could be one of the following in the list that you can see in the screen. For the purpose of VAT, electronic services mean services which are automatically delivered over the internet or through an electronic network or an electronic marketplace. For example, supply of domain names, web hosting, supply of images, text, and information, supply of music, films, games and demand, supply of online magazines, supply of advertising space on a website and any rights associated with any such advertising, supply of political, cultural, artistic, sporting, scientific, educational, or entertainment broadcast, including broadcast of events, live streaming via the internet, supply of distance learning, and services of an equivalent type which have a similar purpose and function. Any of these considered as e-commerce supply of service. Why do we need to know this? for a simple reason. In the VAT return, according to the law, and here in the UAE, there is something special other than most of the other countries, that if we are supplying goods or service, we need to specify under which emirate we are doing this. Why? Because here we are in a federal government in which each emirate has a separate accounting for revenue when it comes to tax revenue. So we need to account for it correctly. The general rule, if you are selling your products from your shop or from your location, so you have to use your major location. And if your trade license, for example, and this is as per our practice with the Federal Tax Authority on most of the cases, the place of issuance of your trade license is the place that you have to report in your VAT return, even if your customer is located in another emirate. However, when it comes to an e-commerce or a supply of service through the internet, the general rule is the place of where your customer is enjoying the service that you have provided to them. So for example, Etisalat is telecommunication service provider, and if I'm located in Ajman or Dubai or Abu Dhabi, each of which we have to, as at Etisalat, they have to report their sale revenue in the relevant emirate of each usage. However, if they are providing normal service in a specific location, that location will be the location where they supplied their services in their VAT return. There is an exception for this. So for example, we are consultant. We provide consultancy service. And our consultancy through emails, through reports, through memorandum, through whatever means of tools to deliver our consulting. In this case, this does not stand for an e-commerce business. Why? Because I can print out the report and give it in hand to my customer, but I'm just using the email to send it to them. So this is not a supply of service through an internet. And this is a very nice exception to know about. Here there is another summary. Supplies of services in the case that the residency of the supplier here in the UAE to another customer inside the UAE, and he is, and look here, they are saying that place of use and enjoyment. So I'm enjoying the service in Dubai, but the residency of the supplier in Abu Dhabi, it doesn't matter. Why? Because this supplier, whether he is in Abu Dhabi or in any other emirate, we are sticking to the place of the online platform itself. So if I'm having a mobile application that is used by all of my customers all over the country in different emirates, the place of supply is the place of enjoying this service. I can know that through the IP address, through the internet, in which my application can tell me that there was a usage of X amount in Dubai, X amount in Sharjah, X amount in Abu Dhabi, etc., regardless of the registration status of even of the recipient. The VAT applied majorly on 5%. However, there is an exception for 0%, and mainly the 0% service through the internet is relevant to the educational services if they are satisfying the condition as an educational service provider. So for example, if you have your kids in the school, you are not paying 5% VAT because this school is fulfilling the requirement of the 0% taxability. However, if I'm sitting at my home and I decided to provide educational lectures to certain category, this does not qualify and is subject to 5%. If the status of the residency of the supplier in the UAE, but he's providing the service to somebody who's outside the UAE, there is no tax. Why? Because there is a platform. However, on the normal case, if I am providing an export of service, apart from these electronic services, it will be subject to the rules of export of service, which is subject to 0%. So this is another exception. If from outside the UAE to the UAE and the customer is not registered, then the supplier have to register here in the UAE and he has to account for the VAT, whether 5% or 0%. However, if the customer is registered, then their customer or the service recipient must report this through his VAT return in the reverse charge mechanism according to the law. If my platform is outside the UAE, and I am based over there, I am providing my service to a customer who is also outside the UAE, there is no taxability. It's out of scope according to the law. The last topic I will speak about is the VAT on artists and social media influencers. And this is a very important topic, actually. You know, this country, there is a lot of social media and influencers over Instagram, over Facebook, over whatever means of or platforms over the internet. So all of these guys, they doesn't know that they are subject to tax. You as a business, you come to them, tell them, okay, please, can you promote my product through your Instagram account? Here's the post, here's the details, and I will pay you this amount. This amount paid to the influencer or to the artist or whatever this person is subject to 5% when he charge it to you. And of course, the VAT registration threshold applies and everything. And in this case, he will be subject to 5% VAT on all his services. So who is responsible? Individuals who make supplies in their personal capacity as performance singer, dancer, stage artist, makeup artist, DJs, whatever relevant, and social media influencers who are individuals who provide their services using social media to promote products and services such as bloggers, YouTube hosts, etc. Such individuals are referred to as social media influencers or SMIs. So what is taxable? So for example, if the SMI or the social media influencer, he decided to buy whatever products, whatever expenses needed to promote your service or to promote your product, and he is recharging this expenses to you, in this case, such rate charges are subject to 5% on the top of the full price or the full amount. If they are providing only service, again, just to open the camera and start speaking on Instagram about your business or about your product, when they charge you this amount, they are subject to issue a tax invoice with 5%. They have to have a separate tax registration number, and they have to report for in their VAT return on quarterly basis or whatever periodical reporting to the Federal Tax Authority. So these are the requirements. They have to register for VAT, they have to issue tax invoices, and they have to report according to the tax compliance rules by the FTA. And of course, they have the right to recover whatever input tax or taxes paid on their expenses in the case that they are reporting their taxes to the Federal Tax Authority. These are the major penalties. I need the last 20 seconds.
No problem. No problem.
The major penalties, I just included these type of penalty. There are a lot of penalties for a lot of cases in as per the law. However, the major penalties related to this that failure to register, failure to deregister, failure to submit your tax return, failure to do your payment, and mind here the failure of the taxable person to settle the payable tax is up to 300% of the taxes that you have to pay. So this is a very sensitive one. Failure to keep your records as well. This was the introduction or the major topic, and I will leave it to you right now for Q&A.
Yeah, Ahmed, thank you very much for your time and your expertise. I'm sure there's lots of questions flying around in people's heads in terms of VAT and in terms of, specific questions about what you spoke about. I will now open up the floor now to Q&A. So what I'll do is there's a few questions that have come through the chat, and then I'll let people, speak as well to ask their questions at the same time. So the first question is from Peter. In the case of a supply from a non-resident to the UAE, is there not a requirement for the supplier to register with the FTA as a non-established company? So that's a question from Peter.
Okay. So let's answer questions one by one.
Yep.
And I will leave it to Yazan if you would like to answer also.
Yeah, hi everyone. Hi Peter. Thanks for your question. So let's repeat the question again for all of the attendees. In case of a supply from a non-resident to the UAE, is there not requirement for the supplier to register with the FTA as non-established company? As Ahmed mentioned, normally as a basis, there is two types of registration, either natural person or as a legal person. So if you are selling in the UAE as a natural person or as a legal person from outside, and you have a trade license, let's say issued in the UK, and you are doing your selling here, for example, by one of the platforms, then here you are eligible for VAT registration from day one. The registration thresholds caps will not be applied on your case because you are not a resident in the UAE and you don't have a local trade license that needs you to count for the threshold. So for this question, yes, you will be eligible to register from day one as a foreign entity, and you will have your TRN number. You will be eligible for submitting your quarterly VAT returns and payments, and to be VAT compliance.
Thank you very much, Yazan. Is there anyone else who wants to just, ask a question, obviously via video, or as well as I'm just going to start reading questions out. So if anyone, feel free to unmute yourself and ask a question to the experts.
Hello, hi. Can I ask a question?
Yeah, go for it, Elsie.
Yeah, so thank you for the presentation. It's very informative. I just have a question about the evidence of export. I know from Dubai, you have to provide an exit certificate, as Dubai Customs issued a notice for that. But what about other Emirates? What is the official evidence of export to satisfy the need for zero rating?
Yeah, hi, sir. Actually, the proof of export is a very sensitive subject that's still ongoing discussion with the FTA regarding this. So actually, this will depend on the type of export that you are exporting outside of the country. Normally, applying for the exit permit for a small or non-expensive item is a bit costly. So for example, if you have a store in the UAE and you get an order in KSA and you want to export this order to KSA, here it will not be profitable for you to issue an exit permit regarding this as the first point. And the second point, you will not be able to do it because you might not be the exporter or the transporter of the goods. So this will be exported through an agent or shipping company who is doing this on behalf of you. Here, you need to try to support this transaction with the full type of documents. For example, the airway bill that's issued by the let's say well-known forwarders such as DHL, Aramex, FedEx, Emirates Post, all of these. So here, once you receive an airway bill from them, once you receive the payment from outside into your bank account, once they confirm to you that this good has been shipped to your customer in that country or that region, then this might be an official evidence that the goods has been exported outside of the country. However, regarding the big product or machinery or cars or such type of products, in this case, yes, you require an exit permit. Most of the customs authorities here will be eligible to issue an exit permit to prove that the product has been issued or the product has been exported outside of the country. Ahmed, do you have anything to add regarding
Well, actually, thank you for the answer, Yazan. I believe I want to speak about it in general. So at the end of the day, the Federal Tax Authority, when it comes to the tax audit, they will look into the documents also from proof perspective. So in practice, not all of the companies will be able to fulfill all the documentation because, as Yazan mentioned, for example, you have small products and you are selling or you are exporting these products on order basis. So you will not be able to get the exit permit for each and single product. However, you need to prove that this product has been actually exported outside the country. So, for example, we can bring like a receipt by DHL or Aramex. We can bring a receipt by the customs authority outside in that country in order to prove that this product has been actually exported or went outside the country. Another thing, some companies, they are relying on the customs declaration document. This customs declaration document, it can be issued. However, we can change our mind after 1 minute and decided not to export this product. So this is not approved, but the exit permit, and by the way, the exit permit can be issued by all the Emirates. However, in this case also, it's not sufficient. And I'm sharing here in the screen the two types of groups of documents, which is here in section number 4, for the purpose of clause 1 of this article, we need official evidence and commercial evidence. Official evidence, which means export documents issued by the local emirate, which we spoke about, like export document or receipt, and commercial evidence, which are including the airway bill, bill of lading, consignment note, certificate of shipment, or similar document. I hope you get your answer.
Yes, thanks for that, Yazan and Ahmed, for the detailed answer. I think I just want to also make it clear that obviously this webinar is just for information basis. If you want a detailed, review of your processes, and I would suggest you contact Ahmed and Yazan directly. They're our go-to people when it comes to detailed VAT. So, this is just for information purpose, just so because you guys are getting quite technical now. Okay, any other questions? Otherwise, I'll start reading a few more questions.
There are some, there are some. Okay, because I'm reading questions here. Okay. So we are going through the questions, or we are waiting for a video, or
I think you can start going through them if no one's brave enough to speak in a Zoom. So I think you can go through it.
Well, yeah, I saw that there is an answer to the question raised regarding the export, that these are small products, kitchen tools, toys, etc. So I think by this, we need to look deeply into the transactions. As I have mentioned, providing the airway bill by a well-known agent or freight forwarder will be sufficient, along to the proof that the payment has been received, for example, case A to here, on which platform this has been sold, the proof of the purchase, and such details.
There's a question right from Priya. It says, education does not fall in VAT. Then how come distance learning falls within VAT, as it is educational itself? It's a bit vague, but I mean, I'm sure you guys can probably,
Yeah. Actually, I can provide the quick background about this. Educational services is subject to VAT at 0%. Because when we say what is subject to VAT, the 0% and 5% falls under the taxability. However, if we are speaking about an exempt supply, like supply of real estate, this doesn't fall under the VAT. So let's agree that educational services majorly falling under 0% if eligible. If it is fall under 0%, then whether direct communication or direct learning or distant learning should provide or should fulfill the requirement. If it is provided by a registered entity, a registered service provider under the educational, for example, in Dubai under KHDA, so they are subject to or they are eligible for 0%, and the 0% will be applied only on tuition fees. If there is any other exercises or any other activities which is outside the syllabus, it is subject to 5%. And when it comes to universities, the private universities are subject, or the tuition fees are subject to 5%. However, if government universities or 50% owned government universities are subject to 0% only on the tuition fees. So the same applies on the distant learning if the provider is registered according to the law.
And also here it depends if there is, for example, a third-party provider who is providing such type of distance learning. So if it's not directly being provided by the school, it's being provided by an academy or by any other company who's providing such type of learning, then yes, this might attract VAT.
Yeah, thanks for that, guys. I've got another question here. We are a UAE registered company and we provide goods, mainly home products, to KSA and Qatar. These are sold directly to consumers, regular persons, via online platform website. Should we charge 5% VAT?
Normally, this will be considered as an export, okay, and will be subject to VAT at 0 rate. It will not be subject to 5% VAT, since the customers are located outside of the UAE. The products are being exported outside of the EU to this country, bearing in mind to take into consideration the custom documentation requirement to prove that the product has been shipped outside and sold outside.
Okay, thanks for that. Any more questions from any of the participants who joined? I mean, feel free to ask questions directly to the panelists. I'll read a few more questions out on the chat from Mohammed Al-Kurdi. If the product is exempted from VAT like medical devices, shall I, as a retailer, charge the consumer 5%?
Okay. I just saw a question now. If the product is exempted from VAT like medical devices, shall I, as a retailer, charge the consumer 5%? Okay, let me tell you something, Muhammad. First of all, the medical devices are not exempted from VAT. These are, if eligible, are subject to 0%. So now we are speaking about taxability. And by the way, I mentioned 0% and exempted twice now because there is a big difference. The difference is if my supply or the type of my supply is exempt from VAT, meaning of exempt that I cannot recover any input tax or any taxes paid to fulfill the supply of this goods or product. However, if it is subject to 0%, I can recover whatever taxes that I have paid to fulfill this product. So if I am buying a medical supply or medical product to resell, then at the time of buying and I am paying 5% for any reason, then in this case, I can resell it on 0% and I can recover back the VAT paid on it. So if I am a retailer, if this medical supply, according to its type, subject to 5% or subject to 0%, which is eligible to 0%, and this eligibility can be known from the Prime Minister decision that is relevant to the medical supplies. So if this falls under this decision, then you can use it or you can supply it under the 0%. Otherwise, you have to supply it on 5% basis. And it depends also on the type or on the usage of this medical device. So it depends on the definition. Maybe you are using, the hairdresser, you are considering it's medical device. No, it's not medical device. However, any other medical device that is crucial for the human being health, that could be considered as medical device and can be charged at 0% of VAT.
Thank you very much. There's another question. I think this is a pretty basic question. So can we claim input VAT on lunch food with customers during the normal course of a meeting? So let's say I have a meeting with one of my clients and I'm, taking them out for dinner. Can I claim back the VAT on that?
Well, these expenses are considered under something called entertainment expenses, and the Federal Tax Authority have issued detailed clarification regarding entertainment expenses, and they have mentioned in this clarification that normal pantry expenses in any company or any office is claimable from input tax perspective. However, if I'm inviting my customer or my potential customer to a meal or to dinner or lunch or whatever, this would be considered as an entertainment expenses, and this is blocked from recovery of input tax perspective. And I know this is crucial for a business, but they have considered this as an input tax, non-recoverable input tax expense.
Thank you very much. There's two more questions that I need on the Q&A. Is there anyone else who wants to just ask a question in person? There's only 10 minutes left anyway, so there's two more questions that have been asked on the Q&A. So one is by Farouk. What documents are required for imports outside the UAE to outside the UAE for a UAE tax resident? So I think what Farouk is meaning is if you're exporting from, China to the US and you're a UAE tax resident, what documents are required from that perspective? Obviously that means that there's no VAT to be charged unless there's circumstances around that. So how would that work?
Well, Farouk has to know that, first of all, this transaction from VAT perspective is out of scope. So we shouldn't report this in our VAT return because this is a sale from outside UAE to outside the UAE. However, to prove your position, you have to maintain a proof of documents for this transaction. So for example, you are hiring a supplier in China, okay, and you have a contract with him, you have invoices, maybe he has raised it to you, and you are paying him to deliver this product to your customer in the UK, for example. So in this case, you have both communications, you have both contracts with both parties, you have both payments which you have paid to this guy and you have received money from this guy. These all these proofs should prove your situation as an outside to outside supply of goods outside the UAE, and you can easily do not report it in the VAT return if you have these sort of documents.
Thank you very much. There's another question from an anonymous attendee. How about supply of goods and services to the GCC countries? I guess this kind of, I get this question quite asked a lot as well. And a lot of it is to do with, I guess, in the GCC framework, there's some sort of agreement between the GCC states, right, about having a customs union. And, you know, it's very similar to the EU, where certain transactions are zero rated and certain transactions have VAT. So do you want to, I guess the root of this question is more about the customs union. So is there anything that you can shed light from that point of view?
Well, actually, as you mentioned, Raihan, this is mentioned in the GCC framework agreement. It was issued in 2015 when the GCC country decided to implement the VAT law. However, in each law, for example, in the law of the UAE, you might read implementing state. That means that the state who implemented VAT, or the country or the GCC country who implemented VAT. However, as we all know, not all of them has implemented the VAT. Therefore, until the moment, there is nothing called like a GCC system or GCC VAT system, because it is not yet effectuated because of the reason that not all of them has implemented the VAT. And this plays a big role. For example, as you said, Raihan, in Europe, it's a tax zone. The whole Europe is a tax zone. However, the intent of the GCC framework to be a GCC tax zone, but it's not yet active until now. So if I am selling a product to KSA or to the UK, the treatment is the same from VAT perspective until the moment and until they get activating the GCC VAT system.
Cool. No, thanks for that. We're running out of time. There is another question about StockX. So I'm not sure what StockX is, but I'll read out the questions anyway. So this question is from Abdul Hakim. How about isolated transaction using buy and sell app of goods such as StockX, sold coming from UAE, going to StockX, and then shipping to outside the area of the UAE? I'm not sure what StockX is. Maybe it's commodities or shares or something like that. Abdul Hakim, why don't you unmute yourself and just give us a bit more insight about your question?
Yeah, I think StockX is like an online store similar to brands, others like Namshi and Sixth Street and all of these. So they are more in selling clothes and shoes to customer. So here, as I understand from the question, you are a local supplier here in the UAE. You are providing your goods to StockX, who are also resident in the UAE. And then StockX will be responsible of shipping the goods outside of the UAE. Since here your first transaction is with the local registered company and it's been done inside the UAE, here this will be subject to VAT at 5%, as you are moving the ownership of the goods from your side to StockX, and then StockX will be liable for the shipping of the product outside of the UAE. So then the StockX, they are the one who will be decided on what type of rates to be applied. But for you as a local supplier selling to another local supplier in the UAE, this will be considered as a local transaction and will be subject to 5% VAT.
Thank you very much for that, Yazan. I think we've run out of time. Ahmed and Yazan, how's the best way people can contact you if they have more questions on VAT and if they want to take up your services?
Absolutely. Anybody can reach directly to us. We can provide our email, our contact details, and we are happy to answer any question to help anybody with other related VAT questions or requirements. So we can share this, Raihan, and it can be shared with all the attendees or whoever required this or requested this.
Okay, great. Is there any closing thoughts you want to just pass on to the attendees?
Well, actually, in general, I would say that because normally when we speak about e-commerce, there is a big side and small side. the big side that e-commerce, most likely as what we have discussed during this webinar, and we need to take care of our VAT reporting. However, the small side, I mean, the small sellers or the small suppliers who are selling products, but they are unaware of the requirement of VAT or tax liability, they are falling in. So I would ask them to review the law or review these slides once we share it and decide or measure whether they are subject to VAT registration or not in order to comply and be in the safe side.
Cool. No, thank you very much. Very wise words. Yazan, anything from you as a closing remark?
I think everything is clear. I'm sharing our contact details in the chat box also. If someone needs to capture it from there, it would be good to take it directly from there, so everyone can have it.
Cool. Great. Thank you very much. All right. So we are recording this session. We will be sharing it online once it's been edited. And yeah, feel free to reach out to us if you have any questions. Yazan and Ahmed have passed their contact details in the chat. We'll share it once we share the recording. And I wish you guys best of luck and thank you very much for attending. Take care, guys.
Thank you, and thank you for all attendees, and nice to be with you during this 1 hour. Thank you so much for attending. Thank you, Raihan. Take care.
Take care, guys.
Thank you.
Thank you. Thank you.